Konnichiwa, Pinocchio. How's it going, everyone? My name is Amos. Welcome back to another episode of the Compounder's Corner. Today, we're going to be taking a look at all of the companies reporting their earnings this week, and I'll be sharing my commentary on which ones have my attention and then which ones I'm bearish on. Between you and me, usually a Compounder's Corner episode, a little laid back, and it's usually the duration almost 2 hours. And in the 2 hours, we usually talk about 40 to 60 companies. This one right here, I do have to keep it short and be cognizant of the time because I want to go play pickup soccer. So I can't go too long. So, on a high level, here are the biggest takeaways from this week's earnings. Number one, you have the big retail giants, including Walmart on Thursday. You got Target on Wednesday, Home Depot, Lowe's, TJ Maxx, Ross, and you also have the Chinese Mag 7, including Alibaba and Baidu, which is kind of like Google. And before we hop into each day of the week on a deeper level, just wanted to let you know some recent videos that were uploaded onto the channel. Two different videos in which I share which stocks I believe to be undervalued right now. One of the videos is based on the stock price history, so if they're trading near their 1 or 5 year low, and then the second video is based on the fundamentals. So if you're the kind of person who feels like nothing's on sale, you got to go and give them a watch. And by the way, here's a showering naked kind of thought for you. I realized the other day, having a solid circle of friends where you can just send a picture of your massive morning dump without context, dude, that's a powerful thing. Do not take it for granted. Before getting married, I was in all kinds of friend groups. Ministry friends, work friends, school buddies, military friends, and everything else, right? But with all of the moving around I did over the years, those relationships just faded into the background. And what's crazy is I always imagined that I would have plenty of friends as I developed salt and pepper in my hair, which is kind of weird because I'm turning 35 in a matter of weeks. I'm starting to see more and more white hair. And at one point, I used to be really upset about my situation. Like, how did this happen? How do I not have a single close friend that I can text anymore? And then, as you all know, history, the pandemic hit, lockdowns happened, and staying home quickly became the default. Like, you weren't allowed to go out. I think you could, but you would be in trouble. So I got used to the isolation, so much so that I actually started preferring it over socializing. Because I think up until the pandemic, I was always a life of the party, center of attention, hanging out with people kind of a person. But because of the pandemic, I feel like something switched within me. Maybe I'm just comfortable being by myself because I'm not lonely. I'm not. I think in the past, I used to be like, man, I wish I had friends. But now I'm like, I've got my hands full taking care of a baby. And I pretty much read out loud all of the Wall Street news and headlines to her in the mornings. And I think she loves it. Not sure, but she usually smiles. It's kind of funny, right? Still, my wife is always encouraging me to get out there and make some friends. It's kind of funny, right? I'm a guy in his 30s. That's something you would tell someone that's like maybe 7 years old or 10 years old. Like, go out there, honey, make some. But I digress. I think that's easier said than done when you're an old fart, right? Like when you're in your 30s and 40s and 50s, dude, everyone's calendar is packed to the brim, which is code word for no. I would rather drink a beer and play video games than hang out with you or go to the movie theaters or whatever. So, my takeaway, by the way, are you starting to see that the Compounder's Corner is all over the place? Sometimes it's about stocks, sometimes it's about personal life experiences, and I just share some stories with you. So, my takeaway is that friendships come easy when you're younger because of the proximity effect, right? When you think about it, you naturally bond with people at school, sports or youth clubs because you're literally forced in the same room every single day or same center field, whatever it is, and nobody has real responsibilities yet. And you're all going through the same experience, same age bracket, and whatnot. And funny enough, it was all of our dreams at the time to grow up and talk about deliverables at weekly touchpoint meetings with a toxic supervisor, or to hop on Zoom calls when your presence is completely not necessary. I think that one would drive me up a wall when they would send an invite to like 50 or 200 stakeholders when only about 10 needed to be there and the rest of us, it's wasting our time. Or to write an email to set up a quick alignment call to discuss the agenda for next week's pre-meeting. Like, dude, sometimes I miss the corporate life, but when I reflect on stuff like that, and I remember how stupid some of it was, I just laugh. Because now I'm a stay-at-home dad. But anyways, I guess what I'm experiencing, it went from feeling negative associations, being alone all the time. Now I'm like, you know what? It's not so bad. So I guess it's just a normal part of growing up that I wish I knew. I wish people would have told me, like, once you get married and have kids, you kind of turn into a lone wolf by default. I feel like the people that are still single or don't have family, I think they're still able to live that normal life that I once had. But honestly, that's why I'm so grateful for this channel and community. I think interacting with the regulars here, call me weird, but it gives me the friendly social interactions that I've missed for so long. And now I'm finding that cup being fulfilled through you guys. So shout out to all of you, even if you're hate watching, even if you're bald and ugly, or if you live in Bulgaria, I appreciate every single one of you. Now, having said that, let's look at Monday, August the 17th. By the way, baby girl just turned 10 months old today, which is pretty amazing. I feel like about a year ago, my life radically changed, becoming a first-time dad. So it's kind of cool, kind of awesome. Honestly, on Monday, amigo to amigo, I don't know any of these right here. Okay, so we're going to go ahead and jump on over to Tuesday. And we got Home Depot, which, by the way, parallel companies, Lowe's and Tractor Supply, this year they sold off tremendously going into the spring season, and I think the markets were resetting their valuation. But ever since May, ever since May, they've been doing pretty well. They've been having a rebound. So if you bought the dip in Home Depot at about $289, $290 a share, I'm positive that you would be a happy camper. 12% for 3 months is not bad at all. Some of you guys have been so jaded by what you see on the internet that may or may not be AI, artificial fake stuff like, oh, I got 500% gains on a single trading week. Like, okay, for every one guy that executes and pulls that off, there's 99 other guys that lost all their money. But if you annualize 12% in 3 months, and put that into 12 months, you're talking about 48%. So if Home Depot continues to rip, if you're a shareholder, I'm happy for you. I like Home Depot. I also really like Lowe's. From my understanding, Lowe's is more so the business model caters towards DIY projects, people trying to fix stuff around the house. Home Depot more so towards the general contractor, so people that are working on actual projects because they're paid as 1099 employees. And it's also contingent upon the economy, because usually you can put off fixing your deck or your patio or something in your house if it can still function, or if it's just kind of ugly. Like, you don't have to necessarily fix it right away. So I would say Home Depot and Lowe's kind of goes into the bucket of consumer discretionary spending, unless it's something catastrophic like a washer or dryer breaking. And at that point, I feel like you would be better off buying it at Costco or Sam's Club. That way you can get a better warranty. But I guess it's a mixed bag. It really depends. And it also is contingent upon what stage of life you are at. Like, if you just graduated from college and you converted your internship into a full-time offer, you got married and you're moving into a home. There's a lot of exciting home projects to do. So for them, it's not really discretionary. It's something you got to do as a young married couple. But I like Home Depot, I like Lowe's, but I personally prefer Tractor Supply because I feel like their mission statement and business objectives, especially with the demographics they're targeting, the rural customer and also the hobby farmer, I'm more bullish on and I really like. Um, yeah, but anyways, we also have uh, Toll Brothers, ticker symbol TOL. And if you take a look at the expectations, Wall Street's pricing in for their revenue to go down 11%, and also their profits per share to be in the red by 22%, rounding up. So, well, actually, let me take a step back. Toll Brothers, they basically build homes for an entire new neighborhood that all pretty much look exactly the same. When I used to live in Virginia, getting my MBA, all around my neighborhood, they were building new homes, and they were pretty much all by the Toll Brothers. And every single one of the homes, cookie cutter, copy and paste, it's basically an HOA drain. Maybe I'm immature, but I've never been a homeowner. That's one of my dreams one day is to own a home. I personally would not want to move into a neighborhood with HOA, understanding the benefits of maintaining the equity value of the homes in the neighborhood itself and being a uniform look and keeping it safe. Like, I get all of that, but to get permission to do decor on my home or to have someone harp on me because my grass looks a certain way or my garden is weird, like, I don't know. I'd rather just move into a non-HOA home, but who knows? Maybe my perspective will change once it comes time to buying a new home. So the gist is the markets are pricing in negative earnings, so the expectations non-existent. So if they post something that's good, they're going to rip. It'll basically be like, oh wow, because we were pricing in that you were going to decline sequentially year over year. But the reason why I'm spending so much time talking about them is Toll Brothers, past 5 years, 142%. It's kind of shocking to say the least. A home building business operation. I mean, it's not one that I would ever want to invest in, but I wanted to make an emphasis and point this out to say, like, dude, you can make money in nearly any industry as long as it's the right cycle, the right rotation, or the right time and space. Because not in a million years did I think that a home building stock would be an outperformer, right? And then also on Tuesday, we have a buy now, pay later operation Klarna. There's two others in that space, including Sezzle and Affirm. I think one of them is a stinky butthole. The other two are pretty high quality. I can't remember. Is Klarna the one that's a stinky butthole? Yes, this is the one that's going through a lot of troubles right now. And I think what differentiates them from the others is they do a lot of business in Europe. And if I had to pick out of the bunch, me personally, I would go with Sezzle. I mean, considering that Klarna is still an unprofitable fintech, and they've been operating for quite a while, and you still can't turn a profit, I don't really like that, right? If we, in comparison, if you take a look at Sezzle, their main bread and butter is doing micro loans for people that are buying a $10 burrito from Chipotle. It's kind of stupid, but it works. Because the kid, like the 19-year-old, they don't pay interest on the loan on the 10 bucks. It's the merchants that do. So it's a really interesting business model. And Sizzle just announced and released a subscription where the Sezzle customer base they can pay into, and opens the door for them to get micro loans to other places. Sezzle, I really like. It's just, I think their valuation is a little fat right now because, well, hold on. The first things first, if you take a look at the green bar right here, since 2023, Sezzle's been profitable. So why would you ever entertain Klarna, right? All else being equal, like Klarna's forward PE was a 70. Sezzle's is a 21, and they're profitable. And look at the growth in their numbers, right? P&L, 43% growth year over year for their top line. And the bottom line, 54% growth. This is one that I did a deep dive on right before my daughter was born in October. And when I did that, they sold off, right? day after day, and I just didn't buy into them because I was so busy at the time. This is one that I really regret not buying into. I genuinely wish I would have bought the dip into Sezzle at about $50. I remember I put in buy limit orders at around 55, and then I deleted it because I said, hold on, I want to do more homework, and I never ended up circling back. So I'm just sharing with you some of my mistakes so you could see, like, if you had bought into freaking Sezzle micro loans to buy a hamburger, stupid, but it works 100% in 180 days. Like, you might think this is a stupid business model, but they're not that different drastically from like American Express or from Capital One. I mean, credit cards essentially the same thing, right? Except with buy now, pay later, they don't really care too much about your credit score. They basically do like an in-house credit check. And when you're 19 or 20 years old, you don't really have a credit score established anyways, but because of the volume of transactions by college students and young working professionals that are like 22 to 23 that use Sezzle, I mean, just look at it, right? They're executing $500 million of revenue, and you might be like, that's nothing. But take into account how 2021 was 114 million. So essentially, in the span of 5 years, they pretty much 4x'd their revenue. So I'm really impressed by Sezzle. I would go as far as to say I'm bullish on them, but I would need a far bigger pullback for me to jump in. But I really like them. I do like buy now, pay later. Like once I started to understand the landscape fully, instead of all the fear mongering saying, oh, all these kids are going to default on the loans, instead of thinking about it from that lens, this is like investing into American Express, Capital One, a JP Morgan Chase 50, 60 years ago before all of the sentiment surrounding credit cards change. Now we know that cashback cards and credit card companies are very high quality, toll booth, economic moat possessing operations. Likewise, with buy now, pay later, that's the camp that I'm starting to associate myself with. Now, would I say that they're low risk? No. I think any industry that makes money off of loans, including BDCs, real estate, and everything else, there is always the possibility of a mass default from your customer base, right? But for that to happen, you would need to see another 2009 financial recession type of crisis. But then again, in my own short lifespan, I've seen stuff that supposedly only happens once in a lifetime, right? A freaking pandemic, a great recession, and some other debacle and crap. So at this point, I wish for a bright future, especially for my baby daughter, but like anything can happen. Anything can happen. Also to the positive. Speaking of the positive, man, I've been doing a lot more research on retirement. I think for me, based on my calculation, I still have about 8.5 years to go for my portfolio to go to 800 grand. And at the time I originally started my investing journey, I wasn't really sure where I wanted to settle down. I thought maybe in Washington State, for the no income tax, but also the weather, the things to do, and some other stuff. Personally, it's my most favorite state, the Pacific Northwest. That includes Oregon, the Oregon coast and the beaches. I think Northern California can also be in this conversation, is just absolutely gorgeous. But now that I'm getting older, I'm also thinking about other stuff like quality of life, crime, um, things to do, safety, especially after living in Japan. And I'm thinking about it more and more. And in a future episode, I'll share with you my research and homework on why I'm starting to think Europe. Now, obviously, as an Asian, a Korean American that doesn't have any lineage in Europe, I can't move back there like easily. But there are some countries that offer passive income visas, and you can pretty much get a permanent residency visa from that. Um, so yeah, I'm leaning towards Europe, and it's kind of nice to have like a clear goal to be working towards again. Because I think when I was in the grind of the baby trenches of being a baby dad, like I kind of put everything in the back burner, and it was all about just keeping baby girl alive and not dying myself from sleep deprivation. But now that I'm kind of, I think I'm figuring out how to be a dad. I'm not a good one, but I'm figuring out how to do things, keep her happy, keep her fed, cleaned, and all that. Now I'm doubling down back on the goals. Because I think as a human, especially as an adult, a male or a female, I think we need to have uh, very clear and articulate goals that we are constantly working towards. Because if you don't, then I think you get bogged down by the day to day mundane pressure and stressors, and you start questioning yourself like, what the heck am I doing? But if there's like a clear goal that you're working towards, whether or not you ever achieve it, I think it helps give you a little bit of sense of purpose, especially on a Monday morning, which statistically, that's, if you consider the days of the week, Monday is when heart attacks happen the most statistically. And I think that's because after the weekend, some of us wake up on a Monday morning and realize we got to go back, clock in 50 to 70 hours a week at a job that we may or may not like. And considering all the stuff that you left on the back burner on Friday before you clocked out, it's like, oof. And another thing is like Europe, I think they really protect work-life balance. I mean, I think in like 10 years from now, I'm not necessarily going to be working, but I think it's good when an entire community has that kind of mindset. Because here in the US, man, I think it's all about working really freaking hard, but also generating a lot of results. Not to say that Europe does not, but if you think about the top 100 biggest, best companies right now, I feel like 97 of them are based in the US. And I think it's also because of the American work ethic. So I think America is a really good place to make your fortune in your youth. And I think a good place to settle down in your later years is probably Europe, or at least that's the conclusion that I'm reaching. Because in the US, I think my biggest concern is health insurance. Like, I really wish we could have a big healthcare reform, but I don't really see that happening, at least in the next 5 years, maybe in 10 years. But, anyways, I'm so sorry, guys. That's what happens when you live your life with ADHD. I'm currently unmedicated. I've never been medicated. I'm thinking about doing it because I heard that once you hop on Adderall, you're able to focus, stay on task, and not do what I just did, right? Ow. But anyways, there's also TJ Maxx. Expectations are kind of modest. And by the way, TJ Maxx, let me just show you, past 5 years, they've been crushing. You see that? 115% in the green, just like Toll Brothers. Another one of those things where you can make money in almost any industry as long as you look in the right places. You don't have to just copy everyone and invest in Nvidia or Microsoft. I mean, it's a good, I guess, low risk kind of a thing. Like if you buy Microsoft under 350 or Nvidia under 180, I would say that's low risk. I'm not going to say that's financial advice. I'm just saying my lived experience. Like that's what I personally did. I put my money where my mouth is, and I made quite a lot of money on Microsoft and Nvidia during the dips. But if you look outside of the box, outside of the mainstream, and you look at some of the companies that are flying under the radar, like TJ Maxx or Casey's General Stores or Toll Brothers, and you bought the dip, you would 3x the performance of the popular stocks. There's also Target, which their performance has outpaced my expectations. I sold out of them after buying into them at about like $84, $85 a share. I did not catch the absolute bottom, but if you take a look at what's been going on with Target, despite having some nasty numbers, right? And I say that in the gross sales being pretty much flat or declining since 2023, but I think it's because Wall Street is starting to believe in their turnaround game plan. Let me see if that makes sense through their earnings per share. No, everything is declining. I don't get why they're exploding in valuation, but Target's a good one. I mean, I went on record by saying like Target, Walmart, Costco, and all these other big blue chip household names, you almost can't go wrong buying the dip. Because if you really think they're going to go obsolete or disappear, you need a reality check. I said the biggest popular blue chip ones, okay? Don't give me some obscure outlier example of a company that went bust, okay? because that can happen as well. But like when we talk about and the conversation is around like a Walmart and buying the dip on them, come on, right? Especially when 1 out of 4 Americans do their grocery shopping at a Walmart. Come on. There's Estee Lauder. They pretty much make what is it, like luxury skincare makeup products. Not really a fan of this one. And then there is Zim, which I never really understood. I looked at them on a surface level. It's like a Dividend favorite, and they're basically in the business of shipping cargo. But take a look at their dividend profile. Ooh, dear, that is a funky monkey mess right here. A 4% dividend yield. They cut their dividend by 75%. Yeah, I don't know about this one. I remember during the pandemic, people were infatuated with Zim, and I always dismissed them because their numbers were so volatile and cyclical. I mean, just take a look at their take a look at their volume situation. Sometimes there's highs, sometimes there's lows, and the stock price will reflect that, right? And for me, I really don't like investing in boom and bust type of investments because I don't want my portfolio to be sometimes in the green by 10% and sometimes in the red by 20%. I'd rather a slow, smooth, and steady ride. And if that means a lower total return, then so be it. I think Zim, not my cup of tea. Maybe I need to revisit and figure out like why people were so obsessed with them, but I'm pretty sure it's because their dividend yield at one point was like 40, 50%. And no, I'm not exaggerating. But anyways, Wednesday, man, this is so much easier to do this episode because sometimes we have to talk about 570 companies on a single trading day, and it's like, dang, bro, that's a lot. There's Walmart. I do want to talk about Walmart. I'm really bullish on Walmart. But do I love Walmart enough to add them to the public portfolio series with a 4 PE of a 38? Absolutely not. Reason being is their gross sales is only going up by 5.8%. If you're going to trade for a forward PE of 38, I need to see at least double digits, like 11, 12, 15% growth in your gross sales. But understanding the scale of Walmart and how they make $725 million a year, I guess that's an elephant of a task. But still, don't you think like this type of execution and numbers should be more of a PE ratio, like a 20 or 25? Right? Am I being crazy here? I mean, I really do like the growth of their bottom line per share, 21% year over year. But still, I think Walmart's overvalued. And this might be selfish, but I've been trying to pull the trigger on Walmart because what I have been noticing is a trend of retailers on the platform where they are the ones who get to dictate and decide what's sold on the shelves, especially prioritized front and center, versus name brand products being on the bottom of the shelf, out of sight, out of mind. And I'm realizing that Walmart's not just making their own private label brands for groceries. Dude, they're doing it for everything at this point. Consumer health, makeup, clothing, you name it. And so I'm thinking like, dude, I think Walmart's going to slowly crush the name brand competition that usually sells their stuff at discount chains. So I really like Walmart to the point where as long as their business model is still intact and they sell off for a temporary headwind and they go down to like 95, dude, I'm pulling the trigger. I have to have Walmart. I think this is one of those sleep well at night compounders. I mean, 5 years, 131% in the green. Sleep well at night compounders where even like 10 to 30 years from now, I think I would be very happy with my decision. I just want to make sure that my cost basis in the short term is as best as it can be, right? Because even a very good business can be a very bad investment if you overpay for it. And I live by that. I really do. Walmart, I've been monitoring for probably 5 years. I bought them and sold out of them, I think 2019, and then I sold out of them at the beginning of the pandemic when they had their first initial rip. I was like, ooh, hold on. I bought them like right around here, around $40 prior to the stock split, and then I sold out of them like right there when they had their little. This is not a good stock chart to look at. But anyways, it was like a 40, 50% gain, and I was like, all right, I'm happy with my profits. I should have just held on, but you live and you learn. So Walmart is one that I'm 100% going to buy as long as the business model is intact and they sell off. But I have a bad feeling they're going to rip. And that's unfortunate because I'm not going to buy if they rip, because that's FOMO operating the decision-making process rather than being a disciplined value investor. And then we also have Ross, which, believe it or not, about a year and a half ago, we did a dedicated deep dive on Ross on this channel. I really like Ross. They're an off-price retailer. So I'm explaining what they are to my European, Asian, and African friends who've never been to the US. It's a retail chain that you can buy name brand stuff at a fraction of the cost. So instead of paying like $120 for a Polo Ralph Lauren or $80 for Nike shorts or $150 for Adidas soccer jersey, you'll pay $15, $20, $25, and it'll be brand new. So their business model, it's about, I actually had a coworker at my pharma company who used to be on the procurement team for one of these off-price retailers, and he told me the gist of the role, and it sounds kind of fun. But anyways, it's about buying excess inventory, overstock, canceled online orders, and past season goods from like 2, 3, 4, 5 years ago that are in a pallet. And then they sell it to you and provide a treasure hunting experience. And they, at a Ross, they'll restock the shelves every like Tuesday or Thursday or whatever, depending on the location. The cadence can vary. And so people will go back multiple times a week trying to see what they can find. I really like Ross. If you take a look at their 5-year performance, 96% in the green. And by the way, if you're a guy and you want a new pair of shoes, go to Ross. I'm telling you right now, don't waste your time at a Marshall's or TJ Maxx or Burlington's. I feel like men is an afterthought at those locations, right? You get like a tiny little corner and you'll probably see like 20 pairs of shoes. But if you go to a Ross, they'll have an entire wall dedicated to men. So if you're trying to get a good high quality pair of shoes at 50, 60, 70% off, I'm telling you right now, Ross, I do not have skin in the game. I'm not invested in them. I'm just telling you based on my experience as a stupid American. But yeah, and I think it also makes sense if we're truly in a kangaroo economy and the top 10% of the Americans are living life as life should be, and they're indulging in the finer things, then you think about the average ordinary citizen. If they're trying to save some money, but they still want to wear nice stuff, I think Ross, Burlington, TJ Maxx, Marshalls will continue to thrive. And that's why their numbers are crushing. I don't think this specific demographic are willing to downgrade and buy clothes from Walmart or the Dollar Tree. I think they still want to walk around wearing Versace or Chanel without having to pay $300. So there's Ross. Advance Auto Parts, I went on record by saying I think as the used car market and the new car market being ridiculous, I think the average price of a used car in the US is like $56,000. And no, sorry, the new car price, not out the door, not baking in taxes and fees, is about 56 grand. I think for a used price, I think it's like 29, 31 grand. And I think as car prices stay stupid and ridiculous, I think more and more people are going to hold on to their cars, do DIY repairs and maintenance. Because the general rule of nipple for the longest time was to hold on to your car to at least 100,000 miles. Because that's when you got to do a lot of the big ticket item maintenance, make sure the car is up and running. But now I think people are driving their car to 200, 250, 300,000 miles. And if that is the case, then I think stores like O'Reilly's, Advance Auto Parts, they're going to continue to crush because the maintenance interval for an older car, it becomes more frequent. I think when you have a new car, you take it for granted of how smooth things are. You don't really have to do anything major for the first 60, 70,000 miles, except maybe a change of the tires, maybe brake pads, and obviously some oil changes. But after you hit that 100,000 threshold, that's when you got to start doing some crazy stuff, like the CV axle, the tie rod. You got to start doing some transmission work. And so I think the biggest winners from that trend will be these used car supplies provider. Not necessarily Copart, because I always get a comment on this channel every week about Copart, and I just truly do not see the light when it comes to Copart. From my understanding, I did not do a deep dive. It's a company that sells salvaged cars. So an insurance company basically said this is not safe to drive for whatever reason. Flood damage, theft. Like if someone broke into your car and drove it around for 50 miles, you don't know what they did. And so an insurance company will write it off. Not safe. And so Copart will take these cars and sell it back to used car dealers. They'll fix it up and they'll sell it with a rebuilt title. I just don't really see the vision or the bullish sentiment. Like, I don't get why that would be a good. So if you take a look at their numbers, I mean, it looks solid. So maybe the numbers paint the story rather than the qualitative story, but even if we do talk about the numbers, to see their revenue only go up by 1% year over year, even the salvaged car auction market is slowing down. Or maybe is it that because used car prices are stupid, people are now opening up to the idea of buying a beaten down, broke car? Is that what it is? I don't know. I'm not saying this from a place of hatred. I guess I'm saying it from a place of ignorance. So please tell me, what is the bullish narrative for Copart? Because I'm not seeing it and I would not invest in it unless I know. Because the numbers are not half bad, but you have to believe in the vision of a business model. You have to believe in the economic moat, a durable competitive advantage that is robust against the competition and something that you know will crush for the next 5 to 20 years. But when I think about a company selling broken and beaten down cars at an auction across the country, I'm like, I don't know. I'm missing a piece of the puzzle. And because I know there's a lot of you Copart fanboys, you have to put me on and let me know, because I'm always willing to change my mind. I don't know who put Copart on the map. I guess one guy on Twitter or on YouTube or somewhere started jumping up and down about Copart, because believe me when I say, how the heck does it have so much attention, right? So please let me know. And other than that, these are micro caps, and I do not like micro caps. So let's talk about Friday. There's BJ's, which is a clear third place in the warehouse retail space. Number one, obviously, being Costco. Number two being Walmart, parent company of Sam's Club. BJ's, I would never, ever invest in, because why buy number three in a landscape when you have the option to buy number one? I would clearly go for Costco over BJ's. Think about it like this. If you have the ability to buy the best house on the block and they're all roughly the same price, why go for the tiny little shack in the corner that has a plumbing issue, right? I'm not even trying to be mean here, but they are not best in class when it comes to the warehouse space. It's Costco. It is 100% Costco. And their growth story in China and Asia is thriving right now. You talk to anyone living in Asia, especially in Japan, Korea, or China, do they love Costco? Okay? Anyways, there's Newegg, which is kind of like the Amazon for computer accessories and parts. I actually used to exclusively buy all of my laptops in college from Newegg, and every single time I would get a lemon. So I have a bad taste in my mouth about Newegg. I don't like them, based on my own experience. But other than that, it looks like it's a bunch of micro caps. So like I said, a very short one, and that's another episode of the Compounder's Corner. I appreciate you guys for hanging out with me. I'm going to hydrate, stretch it out, go play some soccer. I love you. Stay strong, stay safe, good luck in the stock market, and take care of yourself. I'll talk to you really soon. See you guys.